And welcome to Crypto Corner. How's it? Hang loose. Welcome to Mongoose Max Hawaii channel. Hello. Yes. Welcome to Crypto Corner in the beginning. I'm just going to make this Crypto Corner. But thanks for watching. Hey! I'm trying to make them good. I'm trying to improve. Thanks for watching. I appreciate. Like, subscribe, make comments, share with friends. The crypto market's crashing because the stock market's crashing. January 6th commission has been postponed. There's a bunch of COVID in Hawaii. What is it? Omicron, LMNOP, I don't know, whatever it is. So I wanted to just test this out, so we're going to test this out. If we look over here, inside the B section, Bitcoin sinks as major crypto leader halts operation. Leader. There's supposed to be no leaders. But the major crypto lender halts operations. So we're going to take a look at this a little bit. Price of Bitcoin and other cryptocurrencies plummeted Monday after a major cryptocurrency lender effectively failed and halted all withdrawals from its platform, citing, quote, extreme market conditions. Extreme market conditions. What's going on here is this. There's a kind of thing where they got different companies. There's crypto and there's a blockchain and there's stuff. It's like a bunch of different little companies on there. That's what's going on. And the cryptocurrencies, the coin that they buy and sell like stock markets, is there too. And it backs these little companies. So this little company is actually a big one. It's a big company. And they take in people's cryptocurrency, right? They take in whatever. And then they lend it out and try to make a profit like a bank does. And then they give returns or rewards to the people that put the money in the first place, or the crypto value. People get all sticky. But it's like, yeah, I guess there's a reason why it should be. What happened? The stock market's down 20%. The stock market. Why is the stock market down 20%? Well, there's a war in Ukraine. China is looking weird. They're going Taiwan. These are major producers on the big world of economics. So what happens now when the world economy gets funky? The stock market, which isn't the U.S. economy, by the way, it's just one indicator, you might say, of the U.S. economy. But the stock market will go down. Oh, we're having January 6th committee meetings. The stock market goes down. Oh, someone wants to get elected. We'll jam the freaking gas prices. The stock market goes down. The gas prices go up. This is all market manipulation by the big wigs that own and control the world. People have conspiracy theories saying, Illuminati, Satan controls the world with the puppets, and all kinds of shit. But it's really just big corporation stuff, where the countries are sometimes smaller than the corporations. Tail wagging the dog effect. So, big political stuff happens. Stock market goes booshu, booshu, booshu. So Wall Street is crashing down 20%. Where do cryptocurrency people get their money? From their bank accounts. And if they're trying to invest in cryptocurrency, they're also investing other places, or they're investor minded. So when the stock market crashes, the people start taking their money out of cryptocurrency. And if you take a bunch of your stuff out of cryptocurrency, the price goes down. It's like Mr. Smith Goes to Washington, or whatever that thing was, or no, It's a Wonderful, one of those Jimmy Stewart movies. And he's in the bank, and all the townspeople want to take out their money at the same time. And they're like, oh no, it's a run on the bank. Yeah. So it's a run on this company in the cryptocurrency space. Should have named this cryptocurrency. So here we go. Extreme market conditions, Wall Street. It is the latest high-profile collapse of a pillar of the cryptocurrency industry. Wow, got industry status. These meltdowns have erased tens of billions of dollars of investors' assets and spurred urgent calls to regulate the freewheeling industry. It's going haywire. So let's make regulations. So that's a big area of concern for crypto people. Bitcoin was trading at roughly 22,400 late Monday. Yeah, it was up to 60,000 at the time, and it's down more than 16% in the past day. Wow. It's down a lot more if you looked at a week or a month. Ethereum, another widely followed cryptocurrency, was down roughly 17%. Ethereum is like 2. If you look at, oh gosh, I had that. Let's go in the gas station. My phone's here somewhere. Where's my phone? This isn't too silly. Okay, now this here is a wonderful, it's a market indicator. You can see it, right? It's a market indicator. This is Coinbase 360. These little squares are showing the cryptocurrencies, and the size of the square shows you how big of the market is. See, Bitcoin here is in red because it's going down, and it says it's down 3.7%, and it's a big red square because it's 44% of the market, right? And Ethereum is a smaller square, and it's green because it's going up. Coin360.com. You can check it out. It's a fun little app, even if you don't do cryptocurrency. You see the big ones. It's just visual. So Ethereum is basically a huge one. Bitcoin, it's just how much of the market is that coin. It's mostly Bitcoin and Ethereum. Another widely followed cryptocurrency was down 17%. Digital currencies and technology stocks, as the Federal Reserve raises interest rates to combat high inflation, have been selling riskier assets such as digital currencies and technology stocks as the Federal Reserves raise interest rates. I think people take their money out. I'm surmising, I'm guessing, they take their money out of the cryptocurrency in order to pay other stuff. So on Sunday, the cryptocurrency lending platform Celsius Network, which is a big one, announces that it was pausing all withdrawals. So it's like the bank, Jimmy Stewart. It's a Wonderful Life. Oh, they're all coming to the bank. It's a run on the bank. So that's what's happening to Celsius with 1.7 million customers. And they're like, with $1 billion in assets. It's probably a good thing that Celsius did that. They're being responsible because those deposits lends out the general. Okay, it just explains it. Lending platforms such as Celsius have come under scrutiny lately because they offer yields that normally markets could not support. Critics have called them effectively Ponzi schemes. The overall idea of Celsius is they're taking people's crypto, holding onto their crypto, and then doing their lending and then paying them back returns. And those types of businesses blow in the crypto world, and they blow in the real world. And in the real world, it is a Ponzi scheme. And so in the crypto world, it kind of has that. So you're placing your trust in that company. So if they decide to turn off the light switch and leave, bye-bye to all your cryptocurrency because they have it in their coffers. So those things are bad, but it's probably them being responsible by holding withdrawals, but you don't know because there was another big crash in the crypto world, and they're going to mention it right here. Second notable collapse in the cryptocurrency universe in less than 2 months. The stablecoin Terra imploded in early May. Here you go, drum roll, erasing tens of billions of dollars in the matter of hours. So their value of tens of millions of dollars in that Terra Luna went. It crashed. It had its own internal stable coins. Now, why it crashed is a whole topic, but the main key factor is that they're stable coin untethered. Stable coins have been seen as relatively safe because they're supposed to be backed by hard currencies such as currency. So it's supposed to be backed by hard assets such as currency or gold. Stable coins are seen as relatively safe. I gotta say, the stablecoin, here's the stablecoin. You make money or you lose money because you trade your digital currency on the day trading. And if you make a gain, then you take that gain and you put it in the stablecoin. The stablecoin is supposed to be like 1 coin per $1 value. It's supposed to take that value and keep that value. So your coins are stable. But if it untethers from that $1 value, like it did in Terra Luna, then it's messed up. So the stable coins are usually backed by something secure, like they'll have something they'll try to back it up. In some coins too. That's the trouble with cryptocurrency, is that you have cryptocurrency and then there's that type of cryptocurrency and then there's that type of cryptocurrency, and without that kind of Ponzi-ish. So that's the trouble. But here we go with stable coins. There's stable coins that are attached to like a dollar, actually. So there's dollar and here's stable coin, and it remains like dollar and stable coin 1 to 1. It's not apt to untether. But there's a type of stable coin, and this is the one that it's said to beware of. They call it an algorithm stable coin. Much like YouTube has an algorithm, Amazon has an algorithm, and whatever's most popular is shoved to the top or something. They have this internal computer formula that's calculated that stuff. Well, an algorithm stable coin isn't pegged to like a real asset dollar or something, like they're trying to explain here, or I'm trying to explain here too. But the algorithmic stable coin is based on the $1 it's supposed to be pegged to is another back and forth trading that requires that a lot of people are doing it and trading and everything. The trading checks and points, and it comes back and it revolves. Look up algorithm stable coins. There's lots of better views, but it's based on a bunch of action in the background. And if that action in the background isn't happening, then that stable coin will lose its value, thus being unpegged. So we just went completely into cryptocurrency, and welcome to Crypto Corner. So I should have said welcome to Crypto Corner in the beginning. I'm just gonna make this Crypto Corner. So here we go. The cat ball didn't go off. No haunted cat ball. Oh well, see, talk about normal stuff and it doesn't go off. Talk about the weird stuff in my other channel, it goes off. So there it is. It's nothing to think about as far as a company's having a problem and the newspaper's making it like cryptocurrency is crashing. It's not crashing. It'll be around still, for sure. And people who are taking their money out of cryptocurrency are probably doing so because the stock market, the real actual Wall Street market's going down. It's like, oh, panic, FUD, fear, uncertainty, and whatever the D stands for, doubt. I think it is. So, have a good day. See you next time at Crypto Corner.